Occurrence of the complication. What would you tell them?
Look, the anxiety is understandable, and yet individuals should understand this is a very rare event. And so the risk to any one individual is extremely low. It has not yet definitively been linked to the vaccine. It's possibly linked. It's rare, and it has manifested within about 1 to 2 weeks after the dose. So if you had this, J&J vaccine a month or two ago, you probably don't need to worry about any of this.
All right, that was Bloomberg's Janet Wu sitting down with Dr. Ofer Levy, who heads the Precision Vaccine Program at Boston Children's Hospital. He, by the way, a member of the special FDA advisory panel who voted in favor of approving the J&J vaccine. We do expect U.S. regulators from the FDA and CDC later on today to give us kind of an update.
Let's get a check of business headlines and the latest in the market with Charlie Pellet.
Right,
hey, Charlie.
Thank you very much. And here's what's going on. Let's begin with Coinbase. Right now at $369.80. That is an advance of 47% from the listing reference price of $250 a share. Stocks, they're trading mixed right now. We have got the S&P down 8, a drop right now of 0.2%. Stocks, though, hovering close to records. Bond yields increasing after Fed Chair Jay Powell said on Bloomberg Radio and Television at the Economic Club of New York, the economy is entering a period of quicker expansion. NASDAQ, though, slumping 103 points, down 0.7%. Dow Industrials up 122, higher by 0.4%. 10-year yield 1.63%. Gold is down $9 the ounce, down 0.5%, $17.35. And West Texas Intermediate crude surging 5%, $63.19 a barrel. I'm also keeping an eye on bank earnings. J.P. Morgan Chase down 1.4%. Goldman Sachs up 3% after earnings. Wells Fargo up 5.2%. Tomorrow morning we'll be hearing from Citigroup and Bank of America. Again, recapping, Coinbase up now by 48% from its listing reference price of $250 a share. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Tim, it's so good to have you back, by the way.
It is really good to be back. I really missed you, and I missed the team.
It's just, we're lost without you. It's just good to have you here. Let's talk a little bit about what's going on with the virus. Pfizer and BioNTech, they do expect to deliver more vaccine to the European Union this quarter than currently targeted. We're seeing, some things go on when it comes to different vaccines and getting them rolled out. Denmark becoming the first EU country to drop AstraZeneca's vaccine. So it's kind of a back and forth here.
Yeah, and as far as those numbers, we repeat them each and every day, and they change. Globally, cases have surpassed 137 million, deaths exceeding 2.96 million, but vaccines continuing to tick up, more than 814 million shots given worldwide.
You and I each getting one.
I know. Well,
get my second one at the end of the week.
Oh, I'm so glad to hear.
Friday. Hey, let's get our daily check on COVID and the vaccine rollout. Great to have back with us Alyssa Rapp. She's CEO of the healthcare solutions company Surgical Solutions. She's back with us on the phone from Deerfield, Illinois. Alyssa, nice to have you here with Tim and me again. How are you?
Pleasure to be in touch with you both again, and I too am one shot in, different from the last time we spoke.
It feels different, right? Doesn't it feel different?
Totally.
Well, okay, so tell us what you're hearing, especially with your healthcare workers. I am curious because of the J&J vaccine. Yeah. There's already a fair amount of vaccine hesitancy out there. How does this make that potentially worse?
There's no question it makes it worse. And I agree with Nate Silver of 538 fame, that the statistician, that he's worried that the hesitancy will get more people killed than actually getting the vaccine, because cases out of 7 million is by no means statistically significant, as terrible as it is that anyone had an adverse reaction. But I am concerned because J&J, the one and done, was such a convenient thing to do and such a good thing to do for many healthcare workers and others alike. And
college students.
Concerned.
I know a lot of college kids who that's how they got it. Yeah.
Well, also for the people who are the elderly who have potentially more depressed immune systems, it was not necessarily as rough or lethal. So it's really unfortunate. Obviously, I don't know if I agree with the decision to pull it, nor did Nate Silver. It is what it is. It does increase hesitancy. The only silver lining in spite of that is that there's been such improvement on distribution that I've talked about with you all before, and how challenging it's been. And finally, we're seeing more vaccination appointments at Walgreens and CVS and Sam's Clubs, et cetera, just like we had forecasted that would be a great solve. And so at least there are more places to get vaccines if and when you are ready, more being produced. So even if it's limited now to temporarily exclude J&J, at least there are more places you can get it if you want it.
Is there any silver lining that we can look at in the sense that this is not just a story about J&J, but it's also a story about Pfizer, BioNTech, and Moderna, given that so many of those shots have been given and there haven't been those reports of those serious adverse reactions?
And Tim, and 95% efficacy once they're administered.
Yeah.
So I'd take it one step further and say these are Cadillacs of vaccines, and if you can get them, you're incredibly fortunate. Go do it. And you're already getting almost 80% immunity with the Pfizer shot after shot 1, which is a real big deal. To your point, it feels good to be vaccinated. It feels good to be freer. So I do think that's really, really a positive.
Look,
What?
I gotta say, I'm just like nodding in agreement here. I was such a relief for me to, close to, it was 10 days ago at this point, to drive out of that CVS parking lot with that Band-Aid on. It felt like a weight had been lifted off.
Yeah,
because we're in this pandemic, and this is the first step and most important step to get out of it.
Well, and I'm going to add on to that this past week or a week ago, we had a little scare at our home, and it was a false positive, but nonetheless, we went through the quarantining again, and my daughter was sequestered in her bedroom. But I have to say, my husband was fully vaccinated. I had one, she had none. And we're thinking, oh my God, we got this far, and we were really stressed out about it and grateful that we ended up all testing negative and everything's fine. But it's a reminder to me, all of a sudden I said in my head, I'm so glad I've got the vaccine, can't wait to get the second one.
Well, and it's really amazing that, we are very fortunate still to feel this way. Only 22.3% of the country is fully vaccinated and 36.4% are one shot in as of yesterday per the CDC. And so we're still less than 25% of the population, those of us that can jump for joy and feel like we are at least, good to go for this round. So I feel really bullish that everyone who can get it, who's eager to get it, should. And if it's Pfizer, Moderna, it takes 2 shots versus 1 for at least a period of time, so be it. Do the 2 and just keep going.
Alyssa, how's this playing out when it comes to your staff who's on the front lines? Because we have talked to you in the past about vaccine hesitancy among frontline workers, among healthcare workers, but we've also heard about data that show that when more people do get vaccinated within social circles, people start to get on board if they were hesitant in the beginning. How's it playing out for your employees?
We have, as you would imagine, it's an astute question. We have had pockets of perseverance and pockets of hesitancy. So some of the hesitancy has, not surprisingly, dovetailed with states or geographies that are more hesitant in general because of their political persuasions, and where we've seen there being a lot of administration of the vaccine, like New York City, people are much less hesitant and much higher vaccination rates even within our own firm. I think that what's interesting is that how Corona continues to play out is also really geo-focused. As Fauci said, it might be all along. We've got hospitals in Michigan that are already teeming with COVID patients, again, fearing the second variant is here. And there are other places that are like empty with COVID right now. It just isn't happening right now. Empty might be too strong, but very low incidence of COVID patients. So it's very varied.
It's going to be endemic, right? This is part of our world. I mean, I was talking to a bunch of CEOs this morning for a Bloomberg event, and they're like, we need to be ready for the next one because it's coming. I mean, how do you guys see it? What are the conversations, Alyssa, you guys are having around that?
Conversations are get the first round of vaccinations, preferably with the 95% efficacy, because then to tweak around the margins for variants with boosters is much easier than if you're starting from base 0. And then of course, if you have already gotten vaccinated, even if it is a variant that isn't perfectly protected, maybe it'll be a diminished immune response. So you just have to hope that this first round of vaccinations is laying the foundation, which I actually genuinely believe it is.
Still thinking about J&J here, even though this happened, they're at this point close to 36 hours ago. Do you think this is the end of the J&J shot? Even if it,
no.
You don't, okay. So even if it,
I don't. I have no insider information on J&J, and I'm not a board member, but they've administered 6.8 million doses, and there were 6 cases, and they were all amongst women who experienced these low levels of blood platelets in combination with their vaccination. So do I think there will be necessarily additional screens and flags of when you should not necessarily get the J&J shot? Sure. But it's a blood clot, the cerebral venous sinus thrombosis, CVST, which hopefully they can research further and help screen better for the patients who would be at risk, or tweak the vaccine to not cause that response. But again, I do agree with Nate Silver. This is unfortunately statistically insignificant, and the risk of getting COVID and having a really adverse health reaction is higher than the risk of having an adverse reaction from J&J, let alone anything else. So,
but when I say I don't mean that it will be permanently pulled or suspended. What I mean is, even if it does get back to the point where the agencies are recommending that it be given in states, is there a chance that that ship sailed when the agencies made this decision to make this recommendation, and it ultimately led to people saying, okay, well, no thanks to the J&J. Instead, I'm going to go with the mRNA shots.
It could, and the other reality is we also don't know what else is on the horizon to be for emergency approval. I know AstraZeneca and others that have been produced globally are not popular or used here yet, but there will probably still be additional innovations yet that can continue to protect Americans from COVID-19, this variant or others. So I'm still going to bet on the technology and the innovators. It's just how I'm wired and what I believe in. But I do think that, it's a tough position to be in for J&J. I don't think it'll be the last we see of their vaccine, but even so, whether it is or isn't, fortunately, we have enough of the others being produced and so much more widespread distribution that really, if people want to be getting these vaccines after April 19th, which we obviously hope they do, they should have no challenge doing so. There are some states that have much higher stats than the national averages I've given you, of 22% fully vaccinated. Some states, anyone over 16 has been eligible for a long time,
right.
Less populous states. But there are states that are closer to herd immunity than the country as a whole. So let's all get there as quickly as we can.
How important is it all that we all get there quickly globally, Alyssa, in order to really getting ahead of this and beyond it?
I think economically it's absolutely crucial, and I think pragmatically it's also really important. We live in a global marketplace and a global business enterprise, and the phony and false yet real, I guess that's an oxymoron, walls we've put up in this last year and a half in terms of freedom of movement internationally have real consequences. I haven't been able to get my au pair in from France on a very personal note. I have friends who are not being able to see loved ones with ease in Europe. We need a solve globally for these vaccination schedules so that we can begin that freedom of movement and goods more easily, absolutely, as soon as possible. It'll be best for the global economy. Otherwise, the people negatively impacted, the countries negatively impacted by this, are going to get even more acutely, impacted economically.
Alyssa, we always like to check in with you about the health of the business. Speaking of economics, just give us an update about where you are with Surgical Solutions, and also what you're seeing in the healthcare industry right now as it weathers more than a year of the pandemic.
Absolutely. So March 2021 versus March 2020, we were actually, we'll call it in March 2019 even more poignantly, we had seen a nice material jump in terms of same-store growth, meaning elective surgeries were back. Things were operating at the levels we would want them to be considered have recovered. Now, again, that's not even and that's not everywhere, but that is, by and large, it was a very strong March. Things like the major global freeze in Texas, the winter storms, the Arctic events, those that did depress elective surgery volumes in January, there seemed to have been a recovery in March, seemed quote unquote back to normal. But hospitals are still going to end up likely losing as a whole $53 billion this year. That's 53B in a best case scenario in this country, because it's been so expensive to support all of the COVID-19 pandemic related healthcare needs. And so the good news is the CARES Act is helping keep our healthcare system in the black. The better news is that necessity is the mother of invention, and people are truly learning to operate as leanly as they possibly can. But it's going to be, I think, spotty. We'll have strong months like March, like we just did as a company, and I think in healthcare. And then we'll also have probably some dips if and when those variants take a surge, and we see that there are places that keep popping up. Like I know Michigan is right now teeming with COVID patients.
Yeah, it's been a long year, long 13 months, as somebody reminded
Yeah.
Alyssa. And you have been so kind to always find time for us and just keep us up to date on what you and your team are seeing. So thank you for us. Glad you're still doing okay and your team is doing well as well. Alyssa, thank you. Alyssa Rapp, CEO of the healthcare solutions company, Surgical Solutions, once again joining us from Deerfield, Illinois. We're just moments away from President Biden, expected to make some comments from the White House, specifically on Afghanistan and pulling out troops from there. Hard to believe it's 20 years.
It'll be 20 years. The idea with the symbolic, the announcement of the symbolic date is the 20th anniversary of 9/11.
All right, let's take you to the White House and the president.
I'm speaking to you today from the Roosevelt, the Treaty Room in the White House, the same spot where on October of 2001, President George W. Bush informed our nation that the United States military had begun strikes on terrorist training camps in Afghanistan. It was just weeks after the terrorist attack on our nation that killed 2,977 innocent souls, that turned Lower Manhattan into a disaster area, destroyed parts of the Pentagon, and made hallowed ground of a field in Shanksville, Pennsylvania, and sparked an American promise that we would never forget. We went to Afghanistan in 2001 to root out al-Qaeda, to prevent future terrorist attacks against the United States planned from Afghanistan. Our objective was clear. The cause was just. Our NATO allies and partners rallied beside us. And I supported that military action along with overwhelming majority of the members of Congress. More than 7 years later, in 2008, weeks before we swore the oath of office, President Obama and I were about to swear, President Obama asked me to travel to Afghanistan and report back on the state of the war in Afghanistan. I flew to Afghanistan to the Kunar Valley, a rugged mountainous region on the border with Pakistan. What I saw on that trip reinforced my conviction that only the Afghans have the right and responsibility to lead their country, and that more and endless American military force could not create or sustain a durable Afghan government. I believed that our presence in Afghanistan should be focused on the reason we went in the first place, to ensure Afghanistan would not be used as a base from which to attack our homeland again. We did that. We accomplished that objective. I said, among with others, we'd follow Osama bin Laden to the gates of hell if need be. That's exactly what we did, and we got him. It took us close to 10 years to put President Obama's commitment into form, and that's exactly what happened. Osama bin Laden was gone. That was 10 years ago. Think about that. We delivered justice to bin Laden a decade ago, and we've stayed in Afghanistan for a decade since. Since then, our reasons for remaining in Afghanistan have become increasingly unclear, even as the terrorist threat that we went to fight evolved. Over the past 20 years, the threat has become more dispersed, metastasizing around the globe. Al-Shabaab in Somalia, Al-Qaeda in the Arabian Peninsula, al-Nusra in Syria, ISIS attempting to create a caliphate in Syria and Iraq and establishing affiliates in multiple countries in Africa and Asia. With the terror threat now in many places, keeping thousands of troops grounded and concentrated in just one country at a cost of billions each year makes little sense to me and to our leaders. We cannot continue the cycle of extending or expanding our military presence in Afghanistan, hoping to create ideal conditions for the withdrawal and expecting a different result. I'm now the fourth United States president to preside over American troop presence in Afghanistan. 2 Republicans, 2 Democrats. I will not pass this responsibility on to a fifth. After consulting closely with our allies and partners, with our military leaders and intelligence personnel, with our diplomats and our development experts, with the Congress and the Vice President, as well as with Mr. Ghani and many others around the world, I've concluded that it's time to end America's longest war. It's time for American troops to come home. When I came to office, I inherited a diplomatic agreement duly negotiated between the government of the United States and the Taliban that all U.S. forces would be out of Afghanistan by May 1, 2021, just 3 months after my inauguration. That's what we inherited, that commitment. It's perhaps not what I would have negotiated myself, but it was an agreement made by the United States government, and that means something. So in keeping with that agreement and with our national interest, the United States will begin our final withdrawal began it on May 1 of this year. We'll not conduct a hasty rush to the exit. We'll do it responsibly, deliberately, and safely. And we will do it in full coordination with our allies and partners who now have more forces in Afghanistan than we do. And the Taliban should know that if they attack us as we draw down, we will defend ourselves and our partners with all the tools at our disposal. Our allies and partners have stood beside us shoulder to shoulder in Afghanistan for almost 20 years, and we're deeply grateful for the contributions they have made to our shared mission and for the sacrifices they've borne. The plan has long been in together, out together. U.S. troops, as well as forces deployed by our NATO allies and operational partners, will be out of Afghanistan before we mark the 20th anniversary of that heinous attack on September 11th. But we'll not take our eye off the terrorist threat. We'll reorganize our counterterrorism capabilities and the substantial assets in the region to prevent reemergence of terrorists, the threat to our homeland from over the horizon. We'll hold the Taliban accountable for its commitment not to allow any terrorist to threaten the United States or its allies from Afghan soil. The Afghan government has made that commitment to us as well, and will focus our full attention on the threat we face today. In my direction, my team is refining our national strategy to monitor and disrupt significant terrorist threats, not only in Afghanistan, but anywhere they may arise, and they're in Africa, Europe, the Middle East, and elsewhere. I spoke yesterday with President Bush to inform him of my decision. While he and I have had many disagreements over policy throughout the years, we're absolutely united in our respect and support for the valor, courage, and integrity of the women and men of the United States Armed Forces who served. I'm immensely grateful for the bravery and backbone that they have shown through nearly 2 decades of combat deployments. We as a nation are forever indebted to them and to their families. You all know that less than 1% of Americans serve in our armed forces. The remaining 99% of them, we owe them. We owe them. They've never backed down from a single mission that we've asked of them. I've witnessed their bravery firsthand during my visits to Afghanistan. They've never wavered in their resolve. They've paid a tremendous price on our behalf. And they have the thanks of a grateful nation. While we'll not stay involved in Afghanistan militarily, our diplomatic and humanitarian work will continue. We'll continue to support the government of Afghanistan. We will keep providing assistance to the Afghan national defenses and security forces. And along with our partners, we have trained and equipped a standing force of over 300,000 Afghan personnel today, and hundreds of thousands over the past 2 decades. And they'll continue to fight valiantly on behalf of the Afghans at great cost. They'll support peace talks, as we will support peace talks between the government of Afghanistan and the Taliban facilitated by the United Nations. And will continue to support the rights of Afghan women and girls by maintaining significant humanitarian and development assistance. And we'll ask other countries in the region to do more to support Afghanistan, especially Pakistan, as well as Russia, China, India, and Turkey. They all have a significant stake in the stable future for Afghanistan. And over the next few months, we'll also determine what a continued U.S. diplomatic presence in Afghanistan will look like, including how we'll ensure the security of our diplomats. Now look, I know there are many who will loudly insist that diplomacy cannot succeed without a robust U.S. military presence to stand as leverage. We gave that argument a decade. It's never proved effective. Not when we had 98,000 troops in Afghanistan, and not when we were down to a few thousand. Our diplomacy does not hinge on having boots in harm's way, U.S. boots on the ground. We have to change that thinking. American troops shouldn't be used as a bargaining chip between warring parties and other countries. You know, That's nothing more than a recipe for keeping American troops in Afghanistan indefinitely. I also know there are many who will argue that we should stay fighting in Afghanistan because withdrawal would damage America's credibility and weaken America's influence in the world. I believe the exact opposite is true. We went to Afghanistan because of a horrific attack that happened 20 years ago. That cannot explain why we should remain there in 2021. Rather than return to war with the Taliban, we have to focus on the challenges that are in front of us. We have to track and disrupt terrorist networks and operations that spread far beyond Afghanistan since 9/11. We have to shore up American competitiveness to meet the stiff competition we're facing from an increasingly assertive China. We have to strengthen our alliances and work with like-minded partners to ensure that the rules of international norms that govern cyber threats and emerging technologies that will shape our future are grounded in our democratic values, not those of the autocrats. We have to defeat this pandemic and strengthen the global health system to prepare for the next one, because there will be another pandemic. You know, we'll be much more formidable to our adversaries and competitors over the long term if we fight the battles for the next 20 years, not the last 20. And finally, the main argument for staying longer is what each of my three predecessors have grappled with. No one wants to say that we should be in Afghanistan forever, but they insist now is not the right moment to leave. In 2014, NATO issued a declaration affirming that Afghan security forces would from that point on have full responsibility for this country's security by the end of that year. That was 7 years ago. So when will it be the right moment to leave? 1 more year? 2 more years? 10 more years? 10, 20, $30 billion more than the trillion we've already spent? Not now. That's how we got here. And in this moment, there's a significant downside risk to staying beyond May 1st without a clear timetable for departure. If we instead pursue the approach where U.S. exit is tied to conditions on the ground, we have to have clear answers to the following questions. Just what conditions be required to allow us to depart? By what means and how long would it take to achieve them, if they could be achieved at all? And at what additional cost in lives and treasure? I've not heard any good answers to these questions. And if you can't answer them, in my view, we should not stay. The fact is that later today, I'm going to visit Arlington National Cemetery, Section 60. In that sacred memorial to American sacrifice, Section 60 is where our recent war dead are buried, including many of the women and men who died fighting in Afghanistan and Iraq. There's no comforting distance in history in Section 60. The grief is raw. It's a visceral reminder of the living cost of war. For the past 12 years, ever since I became vice president, I've carried with me a card that reminds me of the exact number of American troops killed in Iraq and Afghanistan. That exact number, not an approximation or rounded off number, because every one of those dead are sacred human beings who left behind entire families. An exact accounting of every single solitary one needs to be had. As of today, there are 2,488 U.S. troops and personnel who have died in Operation Enduring Freedom, and Operation Freedom's Sentinel, our Afghanistan conflicts. 20,722 have been wounded. I'm the first president in 40 years who knows what it means to have a child serving in a war zone. And throughout this process, my North Star has been remembering what it was like when my late son Bo was deployed to Iraq. How proud he was to serve his country, how insistent he was to deploy with his unit, and the impact it had on him and all of us at home. We already have service members doing their duty in Afghanistan today whose parents served in the same war. We have service members who were not yet born when our nation was attacked in 9/11. War in Afghanistan was never meant to be a multi-generational undertaking. We were attacked. We went to war with clear goals. We achieved those objectives. Bin Laden is dead, and Al-Qaeda is degraded in Iraq, in Afghanistan. And it's time to end the forever war. Thank you all for listening. May God protect our troops. May God bless all those families who lost someone in this endeavor.
All right, you've been listening to President Biden there in the treaty room at the White House, specifically talking about pulling out of troops here as we hit or come up on that 20-year anniversary of troops in Afghanistan. The president saying specifically that they will begin the final withdrawal from Afghanistan May 1st. Says keeping troops in one country makes little sense at this point. He did speak with former President George W. Bush yesterday about Afghanistan, specifically, listen, going back to the president who was there when those troops were put in place.
Yeah, Biden also saying that we're going to ask other countries to support Afghanistan, and the U.S. will begin that final withdrawal from Afghanistan on May 1st.
All right, a lot certainly on Washington's plate at this point. All right, let's get a check, though, on the world of business right now, a check on the trading day. Here is Charlie Pell.
Hi, thank you very much, and here's what's going on. It is a mixed market on this Wednesday here, a Fed Wednesday with the S&P down now by 6 points, a drop of about 0.2%. The Dow holding on to gains, on track for a record at higher now by 134 points, up 0.4%. We've got NASDAQ down 78, a drop there of 0.6%. Technology shares push stocks lower from records. Treasury yields increase. Crude oil gained. West Texas Intermediate crude up 4.9%, 63.12 a barrel. Gold now down 0.5%, lower by $9 the ounce at $17.35. 10-year yield 1.63%. S&P down 6, lower by 0.2%. Nasdaq down 0.6%, down 79 points. The Nasdaq 100 index down 0.9%. The Dow again up 0.4%, higher by 125 points. Federal Reserve reports America's economy is improving and now growing at a moderate pace. The Fed's Beige Book survey also reports consumer spending gathered momentum from late February to early April. Cryptocurrency exchange Coinbase Global reached a valuation of $105 billion in its trading debut today before pulling back as Bitcoin hit a record and investors bet on digital currencies going mainstream. Recapping, S&P down 7, down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it. Thank you so much, Charlie. Well, this week's cover story of the new issue of Bloomberg Business Week magazine, which will be out on newsstands later this week, as well as online and on the Bloomberg terminal, is about a 23-year-old programmer, Tim, who is keeping American extremists online.
Yeah, his name is Nick Lim, and he provides tech support to U.S. networks of white nationalists and conspiracy theorists that have been banned by the likes of Amazon. Joining us now is Joel Weber, editor of Bloomberg Business Week, joining us on the Access line from Brooklyn, and William Turton, cybersecurity reporter for Bloomberg News, joining us on the phone from New York City. Joel, William, this is just a fascinating story. It's technology, it's about free speech, and it's also about this 23-year-old. Joel, who is Nick Lim?
So
Nick
the
Lim,
story actually... Yeah, we'll let Turton go with that one. No, Bill, you did a great story. Go ahead and take it away. Who's Nick Lim?
Nick Lim is the CEO and founder of Vonmatech, which is a technology startup that's headquartered in Vancouver, Washington, and it provides kind of a specialized set of web services that are key to keeping websites online. Now, the websites that we kind of mentioned here, Nick doesn't actually host them, but he provides an essential service that keeps them online.
So, Joel,
and I think what's significant about that is the context that the world has found itself in since January 6th, right? And what the U.S. Experienced then, and the aftermath of it, as a little bit more attention was paid to where internet infrastructure lies. And what we saw afterwards was that, the AWSs of the world did a little bit closer look and basically kicked a lot of people off their products. So where Nick Lim fits into all of this is that he's basically a service provider of last resort. And so, William, just talk us more about like how Nick Lim became that, and why he feels that that's important.
Yeah, I mean, you were talking earlier that it's a story about technology and free speech, but it's also kind of a story about an island. Nick is someone who, according to people I spoke to, is technically skilled. He is actually proficient in providing these services and has been doing it from a very young age, actually. But, to him, I mean, he kind of summed up his ideology to me as, if it's legal in the U.S., I don't care. And, at one point he told me when he offered free services to Andrew England, who runs the white nationalist website Daily Stormer, that raised his profile and made him famous. So, Nick would profess to care about free speech and providing a platform to those who have been censored by big tech. Then he would also say, as long as it's legal, I don't care.
Well,
and who are some of his clients?
So, the most important client of his, and one that he has actually a very close relationship with, is 8kun, which is the home of QAnon. It's where QAnon posted, and the people who run that website are widely speculated to be Q. And Nick even went to Japan with those people to celebrate the launch of the site. And Nick was integral to bringing the site back, because Cloudflare took the site offline after multiple mass shooters had posted their manifestos on, and they needed a replacement for Cloudflare. Enter Nick Lim. He's the one who kind of revives the site and is able to keep it online during, the peak of QAnon, and to this day.
So what's interesting too, William? I mean, there's so many aspects to this story that are fascinating, and you just want to know more about this guy that's behind us, this 23-year-old. But at heart, he's an entrepreneur, right? Who just, it sounds like, wanted to start a business, but at the same time, he's allowing these extremists who are getting kicked off, the established programs or platforms to continue to kind of go about their business.
Right, but I think with Nick, that's kind of the whole point. I mean, he actively seeks out these clients, and Nick tried to claim to us that he has actually thousands of clients, but in reality, he has a small handful of clients, and they are these kind of fringe right-wing websites.
So, William, you actually went to Vancouver, Washington, which is just outside my hometown of Portland, Oregon, in the fall, actually. So before all the events of January went down. Talk to us about what it was like to visit him.
So, he actually, he split his time between there and Nevada, where he lives, or Arizona rather, where he lives in his mom's condo. But the Vonmatech headquarters in Vancouver, he rents out to some of his friends from high school. When I walked in, I looked on the table, I saw McDonald's fries and half-smoked joints everywhere. In the backyard, there's weightlifting equipment, a shed full of servers that are mining cryptocurrencies, and like 4 bongs. So they nicknamed the house Amsterdam. But it is also the registered headquarters of this company, and I was sort of surprised. I wasn't expecting much, but I was still kind of surprised at just the semblance to a college dorm room. And especially because Nick had initially told me that actually, he has offices that sometimes his employees go to. It turns out not true.
Wasn't it his grandparents' house, though, too?
That's right. According to state records I look at, the house was gifted to him by his grandparents.
What was his upbringing like? Because he sort of has this image of, or conveyed this image of growing up without money, but he was also posting photos of driving around in exotic luxury cars. There's like a lot of contradictions here.
Yes, I mean, completely. Nick in our first interview told me that his kind of early entrepreneurial spirit came out of a necessity to support his family. I tried to talk to his family. I tried to talk to his parents, some of his siblings. None of them got back to me. But, when I found Lim's old YouTube channel, I found, him driving around in his dad's white Lamborghini. So it wasn't exactly a story of, as he told me, creating these businesses in order to, quote, put food on the table.
So, William, let's spin this forward a little bit. There are free speech rights in this country, and clearly Nick Lim has found a way to bask in them. But what kind of ultimately how could this come down on him? Because he is walking such a delicate line here, and it just feels like someone is potentially in a position to elbow him out yet.
Right. Someone could, someone a little bit more adept might come in and offer a similar service. But, something I was actually surprised about, the people I did speak to said that Lim really did have technical skill and that he was good at doing this. And, I found tweets from him as an early teen talking about his interest in DDoS mitigation, for example. As far as liability, I don't really think Lim has any because he's not doing anything that's patently illegal, right? He's kind of just hosting sites that are themselves stretching the limits of the First Amendment. But, I don't think he's doing anything that would be kind of patently illegal.
I'm just thinking that for anybody listening, and how you wrap up your story, it's a business opportunity. When it comes down to it, and he says, however you feel about free speech, this is an avenue where there's demand, ultimately, William.
Absolutely. This sort of practice is never going to go away. There's always going to be someone that fills that gap. And that's kind of a thing that was interesting to me because we talk a lot about social media censorship and deplatforming, but then you have the question, do you have a right to have a website even? And, the website's being kind of kicked off the internet. It is extremely rare instance compared to your Facebook account getting banned, right? And there's always going to be someone like Nick that can kind of fill that void, I think.
I got to say, I love all the details around his background.
Of course, I'm just going to say, of course he has a crypto mining shed in his backyard. When I saw that detail, I was like, of course he does.
Tim and I went all these different places about kind of what happens next in his world, William.
Well, yeah, I guess as crypto prices continue to rise, that might be good for him. I'm wondering if he'll leverage his skills into something that's kind of I don't know, less patently harmful.
Stay tuned is what I'd like to say. William Turton, such good stuff. Cybersecurity reporting, Bloomberg News. Joel Weber, editor of Bloomberg Businessweek. This story, the cover story of the new issue of Businessweek magazine. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, coming up next. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, April 14th. It is a Fed Wednesday. We've got the S&P, NASDAQ both lower. The Dow is higher. Technology shares pushing stocks down from records. Treasury yields increase. Crude oil gain. Let's begin with crude, up now by 4.55%. West Texas Intermediate at $62.93 a barrel. The 10-year yield, 1.63%. Gold is down $9 the ounce, down 0.5% at $17.36 an ounce. S&P lower by 17, down 0.4%. NASDAQ is down 130, down 0.9%, while the Dow Jones Industrial Average holding on to a 47-point gain, up by about 0.1%. The Federal Reserve says economic activity is picking up. And with that story, here's Bloomberg's Vinny Del Giudice.
The Fed's regional survey, the Beige Book, upgraded the pace of economic growth to moderate a year after the pandemic shattered the labor market. Household spending gathered momentum from late March to early April. Hiring picked up, and the travel and leisure industries moved into recovery mode. Prices accelerated slightly since the last Beige Book. Vinny Del Giudice, Bloomberg Radio.
JP Morgan Chase's dealmakers just helped usher in the firm's best quarter on record, but shares are lower as the bank warns that loan demand remains tepid. JP Morgan Chase shares lower now by 1.8%. This morning, we also heard from Goldman Sachs. Shares are higher. Goldman Sachs up by 3%. Wells Fargo higher by 5.2%. Tomorrow, among the banks we'll be hearing from, Citigroup up by 0.9% right now, and Bank of America pushing higher by 1.4%. Coinbase going public, started trading today. Coinbase for up 28% now from its reference price. We've got Coinbase at $321. Recapping S&P down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Goldman equity traders fueling a record quarter amid the Reddit mania. Who said those old guys don't know how to trade? Because they certainly showed up this quarter. JP Morgan Chase, their deal makers, helped usher in the firm's best quarter, but investors still concerned about loan demand. We heard Charlie talk about that. Wells Fargo beating profit estimates, though struggling on expenses, but that turnaround story, investors feeling pretty confident about what Charlie Scharf is doing over there. Wells Fargo, as Charlie mentioned, up more than 5%. Anton Schutz is with us, back with us, President and Chief Investment Officer over at Menden Capital Advisors, back with us on the phone in Florida. Anton, good to have you here. Got so much to talk to. How are you?
I'm busy.
I know, right? I know. I can only imagine. Well, let's go through the names. Goldman. Investors seem pretty happy. This was all about, it seems like, trading for Goldman this quarter. What stood out for you? What do you think we all need to know as investors for Goldman?
I think what we need to know is the pipeline for the investment banking remains incredibly robust. And it's been really interesting in the controversy that's been caused about SPACs. And, you know, good or bad, these companies have gone public and they all have a ton of cash. And there's a 2-year clock ticking on them to spend that cash. So that means if you're an investment banker, you're coming up for ideas to all those hundreds of SPACs that have gone public. And if you close a deal and you get the advisory fee, you've made a bunch of money. So every one of the investment banks is going to be very busy on the M&A front, just on the SPACs alone, let alone all the rest of the economic activity.
Even if some of the SPACs come undone and they just, I mean, are you so confident, Anton, that they're going to all put that money to work in time?
They're going to try.
Yeah.
They're going to try. And that's the thing, right? I mean, maybe not all of them. I'm not talking about those investments. I'm just saying there's a pool of money out there that really wants to find a home. And that will lead to advisory fees for firms like Goldman. You know, my favorites are some smaller companies like a Cowen or a Jefferies. But, you know, they all helped underwrite these things, and they all have relationships. And they'll be on either side of the transaction, right? It's not just the investment banking fee if you're advising the SPAC. It's the investment banking fee if you're advising the seller. So there's lots of fees to go around. And I think that the tax law changes, assuming there's changes in capital gains taxes, it's going to force companies to go, you know what, maybe I should sell now, while the capital gains tax is lower.
Are there
I
homes?
think that's going to be a driver.
Are there homes for all that money, though?
Well, there's a lot of private companies out there, right? It's not just public companies that these SPACs have to buy. But there will be a feeding frenzy, and you're absolutely right in the skepticism that some of them will not be able to put that money to work, right? Not put it to work in a feasible manner.
Let's talk JP Morgan, down 1.7%, but I just want to pull up the year-to-date. It's up 19% so far this year, even with today's pullback. Some concerns about loan demand. How do you see it for JP Morgan?
Well, you've got a tale of a lot of different business lines here. So let's address the consumer side and the credit card. I mean, we basically had the Fed and the Treasury pump something like 42% of GDP into the economy. Consumers have just gotten their $1,600 checks. If they've got a family, they've got multipliers of that. And so they've done lots of things, right? They saved it. They paid off their credit card debt. So particularly on the credit card side, people have paid down debt. And, they'll eventually, hopefully come back and spend it for the economy's sake, as well as for the lenders that want to lend them the money. But that's a line of business that there's just so much cash sloshing around that people are actually paying with the cash for now.
So that means so in other words, it didn't generate as much for JP Morgan as it has in the past?
Well, it wouldn't, yeah, right. I mean, because the consumer is flush with cash.
Yeah.
When do you use a credit card? When you don't have the cash. And so those credit card outstandings will probably rise as the year goes on, unless there's more goodies for the consumers. They'll eventually start spending their savings, which again, another problem for the big banks and all the banks is the entire system is flush with deposits. So, people are looking at their margins going, oh my gosh, but what are you going to do with that money, all that money on deposit? What are you putting it into? Bonds? No, you'd rather lend it. That's what banks want to do. So it's a second half of the year story, I think, for the entire industry. As people work down the cash and start to borrow more money, I think earnings estimates are actually too low for the second half of the year for most of the industry.
So given that the quarter was so good, why are investors reacting this way?
Well, you know what? If you look at JP Morgan, it's beaten every quarter for the last 3 quarters pretty nicely, and it's been down every time.
This was a record first quarter.
Yeah. Oh, it was a record first quarter for, JP Morgan, Goldman. I mean, you're going to see that repeated. And, I think it was a little bit of sell the news, and it was a little bit of that myopic, oh my gosh, they may not have loan growth in the second half of the year. I mean, they've told us they're going to buy $7.2 billion worth of their stock this quarter. Okay, that's pretty good.
Yeah.
I don't think I can't poke holes that quarter. Now, the interesting thing, and I was talking to a lot of traders today about this, financial traders, and the banks get punished when they set aside excess reserves. You recall last year us having the same conversation going, oh my gosh, how terrible things are. They're setting these reserves aside. So how can you punish them for setting them aside and then punish them again for going, oh my gosh, they're in earnings, so they over-earn because they released the reserves? Punish them one way or the other, but not twice.
Well, that's what I wanted to ask you, what we need to understand, because JP Morgan did do a larger than expected reserve release, which added to the quarterly windfall. What do we need to understand about that? You just talked about it a little bit.
Well, I'm not sure anybody wants to try to understand CECL, which was the accounting treaties put in place last year. But it's based upon a lot of assumptions, and Moody's is probably the number one forecaster they use on those assumptions. So if Moody changes its economic model, it has to do with things like unemployment and stimulus and GDP, right? I mean, if you did this report last March, it was, oh my gosh, right? Set aside a lot of reserves. Same thing in July. Now that report reads very differently. You got to release those reserves. It's literally straight accounting.
That's a good point. In other words, there's nothing any tricky to it. And we're running out of time, Anton, but we really appreciate it, and we'll get you back real soon because I always appreciate your input. Your fund, by the way, your RMB Menden Financial Services Fund, it is up almost 32% so far this year, putting it, at least according to Bloomberg data, in the 89th percentile. Anton, thank you so much. Anton Schutz, President and Chief Investment Officer at Menden Capital Advisors, on the phone from Florida.
Well, let's head down to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim, thanks. President Biden says it is time for our troops to leave Afghanistan.
After consulting closely with our allies and partners, with our military leaders and intelligence personnel, with our diplomats and our development experts, with the Congress and the Vice President, as well as with Mr. Ghani and many others around the world, I've concluded that it's time to end America's longest war. It's time for American troops to come home.
Biden says, as promised, troops will begin the withdrawal May 1st, with completion by September 11th, the 20th anniversary of the attack plotted by terrorists based in Afghanistan. This afternoon, Biden is traveling to Arlington National Cemetery to visit Section 60, the final resting place for troops who died in the Afghanistan and Iraqi conflicts. During testimony for the defense in the trial of former Minneapolis police officer Derek Chauvin, pathology expert David Fowler, the former chief medical examiner for Maryland, says he believes drug use, even carbon monoxide from car fumes, may have led to George Floyd's death. He says the fact Floyd's heart was enlarged meant he needed more oxygen to function.
When a heart or any other muscle grows in size, its consumption of those vital components increases. So Mr. Floyd's heart would have twice the need of those nutrients compared to a 260-gram heart.
Fowler also speculates Floyd's meth use may have narrowed his arteries. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Got to say, this hit the Bloomberg terminal today, and all of us in the newsroom were like, oh, Bernie
Remember
Madoff.
when?
Yeah, remember when.
Yeah.
I mean, I just remember a long period of our reporting, like every day we started, with something on the Ponzi scheme that Bernie Madoff had created. He did pass away today at the age of 82. He had been at Butner Federal Correctional Complex in Butner, North Carolina since July of 2009. He was serving a 150-year term. It was the largest Ponzi scheme in history, defrauding investors of more than $19 billion.
Yeah, let's talk about who he affected. I mean, it ranged from wealthy individuals, sports owners, economists, billionaires. The list went on and on. Even people who didn't necessarily know that they had invested with Bernie Madoff. And not all of his victims were incredibly wealthy people. There were people whose retirements and plans for their children and their families were completely changed
Just gone.
on that day in December of 2008.
Right, just gone or reduced. But, you know, you mentioned some of the big names. Madoff's big name investors included Fred Wilpon, then majority owner of the New York Mets, husband and wife actors Kevin Bacon and Kira Sedgwick, Henry Kaufman, former chief economist at Solomon Brothers, had been a frequent guest certainly here at Bloomberg, Boston philanthropist Carl Shapiro, two of Europe's wealthiest women, and the charitable foundations of director Steven Spielberg and Holocaust survivor Elie Wiesel. Excuse me, I didn't say that correctly. Wiesel. But what's interesting is, you know, this was an individual who achieved a certain level of respect within the investment and financial community. He was chairman of the Nasdaq stock market in 1990, 91, and 93. And I think what's phenomenal about this story, Tim, and I know that there's been made-for-TV movies and so on, but how long he was able to keep this going, and you know, to what extent? Fake statements. I mean, a large organization where people didn't seem to know that this was going on.
And not even people in his closest family, his sons and his wife. They didn't know it was happening.
Yeah, exactly. And very tragic, certainly, for members of his family. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a mixed Wednesday with 43 minutes to go ahead of the closing bell. We've got Coinbase trading higher, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's all about Coinbase today. Dow's currently up 95 points, S&P's drops 11, and NASDAQ is lower by 115. The U.S. 10 yield at 1.63%. Gold is down 10. Transports gained 24 points. And among the main 11 S&P sectors, leaders were energy and the financials. Tech was under pressure. Leaders to the upside in the Dow, Goldman Sachs and Traveler, as well Intel and Salesforce led to the downside. And also after earnings, JP Morgan fell 1.8%. Wells Fargo rose as much as 6%. In other news regarding that Coinbase, it opened at 381, hit 429 before fading. And wrapping things up, GameStop rose as much as 23% after it took its step to retire debt. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg Time Squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, today at a Bloomberg Live event called Disruption, the New Economic Driver, I caught up with Jeff Sonnenfeld. He's Senior Associate Dean for Leadership Studies at Yale University School of Management. We talked about a lot of things, leadership in times of disruption. But I also wanted to ask him about news today, a published letter that was signed by hundreds of companies and execs, including those at Amazon, Google, General Motors, Starbucks, Warren Buffett, also Michael R. Bloomberg. He also signed the letter. He, of course, the founder and majority owner of Bloomberg LP. And basically, they came together opposing any discriminatory legislation that would make it harder for people to vote. I wanted to get Jeff on our live radio show because he is in nonstop communication with CEOs, and he is a go-to voice for companies and others when it comes to leadership. Jeff, so nice to have you here with Tim and myself. I feel like lucky for me that I get to talk with you twice today. This letter, I want to ask you about it. How big of a deal is it?
It's a really big deal, and thanks so much for inviting me back twice in one day. I thought, gosh, I must have really messed up, and you're going to bring me before Tim to beat up on me.
No, you didn't mess up.
We'll go easy. It's okay.
You know, in my line of work, we figure these callbacks are always remedial, but I'm going to count this as extra credit. And yes, speaking of extra credit, these CEOs, it is remarkable. It is a great affirmation of each other, which is what we found on our weekend event. We had, on 48 hours' notice, pulled together these titans of industry on a Saturday and invited 90 of them came out. And then while there, Ken Fraser and Ken Chenault invited them and then invited them and their friends to join this petition that was an extension, of course, what the 72 black executives had signed a week earlier. And the response was thunderous. And some of it is it's kind of a strong affirmation of each other, but also a strong statement they're not going to be intimidated by anybody who says, give us your money and shut up. You know, it's about taxation and representation.
Right.
Is this?
You saw this unfolding in front of you then.
Yes, it was kind of a, if you, I don't mean to offend anybody politically, but if you take a look at these voter suppression rules, these laws going across 47 states now. It was 42 last week, and now we're up to 47. Is that seeing that as a viral disease in itself? Counter it has been this gathering storm of CEO support. It is, in fact, a support of defiance in the eyes of those trying to intimidate them. It's happened before in Georgia. Some of the Georgia companies, like Coke and especially Delta and others who got out front on gun safety issues and things, suffered ridiculous reprisals for the positions they took in terms of selective regulatory taunts and actual selective taxation, things that are unconstitutional, of course, but they still became issues they had to wrestle with. These CEOs are saying, we're not going for that. Kind of like they did when Ken Fraser of Merck stood out in front and stepped off President Trump's Business Advisory Council.
Right.
And then you saw that stampede where they all left for first time in American history that the business community said no to the commander-in-chief's call to action.
It's a big deal.
It was a big deal, and it led to everything else, and it led to how that whole council unraveling in the wake of Charlottesville. I'm wondering, though...
And they never went back. They, dribs and drabs, but they never could reconstitute them.
I wonder, though, beyond this statement, beyond this letter, and beyond what these companies are saying when it comes to actions, and what these companies can do to actually compel the state legislatures not to move forward with these restrictions.
Well, that's a really good thing. It's easy. You might say it's easy to sign on. It's really not that easy to get out in front and put your names out there. However, the fact that we, had 72 of them a week ago, and then 100 more this weekend, and now hundreds today in this big statement in the advertisement it's still, people will say talk is cheap. It's not cheap. There are repercussions, and it's really great they did this. However, what else beyond the talk? Enough with petitions. You can have a kaleidoscope of these petitions already.
Right.
Is the next stage of this is you're seeing that there are economic sanctions. Nobody in Georgia wanted, the Major League Baseball to move the All-Star game out. We had, though, commissioned a morning consult overnight set of interviews of a couple thousand Americans. And what was astounding is that it's very popular in the country outside of Georgia, especially with avid baseball fans. And we saw yesterday Apple with Will Smith pull out in the entertainment, sports, filmmaking center of Georgia is very strong. Well, these kinds of economic hits are profound, but there are other issues. There are legislative issues, and there are things like you may have seen today. Brad Karp just announced, the chairman of Paul Weiss, that they have bounded together almost 70 of the nation's largest law firms for SWAT teams, ready right now to go out to these states.
Hey, Jeff, just quickly, and it's got to be quick. We've only got about 30 seconds. Is Delta making a mistake? Coca-Cola making a mistake? They're in the state of Georgia by not being part of this petition, or at least this signature, this letter. Are they making a mistake? Just quickly.
Great question, because, Walmart, Doug McMillan has been very out in front of these kinds of issues, and so was Jamie Dimon and J.P. Morgan, is the fact that some didn't sign and think, we've been out there and we don't need to be the only ones, and they don't know who else is going to be. So, there's no question about where they stand on these issues. So we don't need the same people and everything. It's kind of nice to freshen up the list, that they're all on the right side of history. So that's what really counts. And they're speaking out in a lot of different ways. Let 1,000 flowers bloom.
So not a mistake, yes or no, by not being on that letter?
If I were there, I think they should have done it, but I don't think it's costly they didn't.
All right, Jeff, good. I hope we can get you back real soon. I really appreciate it. Jeff Sonnenfeld, Senior Associate Dean for Leadership Studies at the Yale University School of Management. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We're going to come back with Dave Wilson and the chart of the day. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I didn't guess so well. But I didn't cheat either. I didn't even try.
I was going to say that I'm going to be a little rusty because I've been off for a couple of days. But I'm always a little rusty when it comes to guessing Dave Wilson's Song of the Day.
Well, one of our Twitter followers was like, try Shazam. It'll help you with the song.
Yeah, Apple owns it now. That's always a business story.
I know.
Always a business story.
Chart of the day coming your way. Let's, though, get another check on the trading day. 29 minutes to go, Charlie.
Yeah, indeed. We're looking at a mixed Wednesday. Do want to begin, though, with a couple of headlines in New York in terms of easing of COVID restrictions. New York extending the 11 p.m. restaurant curfew to midnight as of April 19th. New York also allowing auto and horse racing to reopen on April 23rd. Technology shares pushing stocks down from records. Treasury yields increase. Crude oil gained. Let's begin with West Texas Intermediate rallying 4.5% now, 62.90 a barrel. 10-year yield 1.63%. 10-year down 5/32. Gold down $8 the ounce, lower by 0.5% at $17.37. As for the equity markets, S&P down 10 right now, a drop of 0.3%. NASDAQ is slumping 108, lower by 0.8%. Dow Industrials up 98, a gain there of 0.3%. Cryptocurrency exchange Coinbase Global soared above a $112 billion valuation in its trading debut and then slipped back below its opening price as Bitcoin fell from a record. Tech stocks lower across the board. Right now, looking at shares of Coinbase, Coinbase Global is at $334.72. Again, stocks are trading mixed. The Dow higher, S&P, NASDAQ, they are both lower. The White House says the U.S. inoculation campaign remains on track despite a pause in Johnson & Johnson doses amid health concerns. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
The other thing that this pause is going to be good for is to really assess the data and to put out guidance to physicians so that if they do see one of these rare events, they know exactly what they should do, medically speaking, in terms of treating these patients, because this is not a simple blood clot. This is a much more complicated clotting condition that's being presented.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, Johnson & Johnson shares, they're up today by 0.3%. Pfizer shares down 0.1%. Its German partner, the ADRs of BioNTech, they're up 2.1%. ADRs of AstraZeneca up by 1.3%. Moderna higher now by 5.7%. Avis Budget Group shares at a record as an economic reopening that's boosting travel demand collides with industry-wide inventory tightness. Shares of Avis Budget, ticker CAR, they're up by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Who this is? Oh, it's Joan Jett, right?
Right.
Yeah. I was just trying to place it.
Hall of Famer Joan Jett.
Love
I just
Joan
wanted
Jett.
to let it play out so we could, so Carol could get it.
He so did not. He just had no clue.
Right.
I'm sitting here not searching for it, not Googling, so.
Tim, I had an Arcade Fire pick this week, and you weren't here. I figured that.
Oh, I got a total diss.
Oh, no.
Total diss.
I would have
He's
gotten Arcade Fire.
He's totally, and he's like, Carol, this is like not your generation. I'm like,
Dave, are you following me on Spotify or something?
No.
So painful.
I just, I think about when the band came up and, how long you've been around, so to speak, and, I try and put the two together
I've been to,
see how it all kind of fits.
I've been to many an Arcade Fire concert in many a state, so, yeah,
Well, there
I'm a
you
big
go.
fan. So thanks for thinking of me. Next time I'll get it.
Yeah.
Yeah.
All right.
You know, great minds and all.
So what's the chart? What do we got with the chart?
Well, I mean, you talk about an industry group in the stock market that's had a bad reputation for a while. Financial stocks certainly fit that bill. Really, ever since the 2008 financial crisis, you know, they've kind of struggled to do better than, you know, the broader market as represented by the S&P 500. But here we are, you know, today is the first day in which, you know, the banks are reporting first quarter results, and we're going to see a lot more numbers come out over the next few days and weeks. And this time around, you know, they have a whole lot more at stake, the financial companies do, because they have done relatively well the past couple of quarters. You know, I ran the numbers comparing the percentage change in the S&P 500 financials index with the S&P 500 itself, and found out that in the last 2 quarters, the industry group was ahead by more than 23 percentage points in relative terms. And you haven't seen 2 back-to-back quarters like that since 2009, when a bull market was just getting underway. You know, back then, we're talking about the second and third quarters, really the start of that decade-plus bull market at the time. It was 37.5 points. So, you know, it just kind of tells you that, you know, when it comes to the reaction to the numbers that we see from the likes of J.P. Morgan and Wells Fargo, of course, later in the week, Bank of America, Citigroup, and the like, you know, you kind of have to put it in context. These stocks have done relatively well. Investors are going to expect a lot from them, no doubt, because of that. So it's a useful kind of perspective. And if you don't have it already, folks, if you haven't seen the chart, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So is your point, Dave, that banks are basically have a lot more, especially these big banks or financials overall, have more at risk because of the run-up that we've seen in comparison to the broader market?
Well, you would think investors would demand more from them and be less forgiving in terms of the quarterly results. I mean, you know, we certainly saw that with J.P. Morgan, and earlier in the day, at least with Wells Fargo, that, you know, even though, I mean, their earnings and sales were beating estimates, you know, people were looking at the numbers and saying, well, it's all about loan loss reserves they don't need anymore. So, you know, that's an issue. And that's the sort of thing that may get more attention than it would otherwise, simply because, you know, these company shares have done so well, not just absolutely in terms of their moves, but also relative to the broader market here.
So a lot of the good results that we saw today, for example, with J.P. Morgan, record quarter, baked in, the stock is down.
Arguably so. I mean, that's another piece of the puzzle. You know, when you figure the group has done so well, you know, in the fourth quarter of last year and the first quarter of this year, you know, what does that tell you about investor expectations for what these first quarter results are going to bring? You know, it'd be another thing if, you know, we go back 3 quarters before that. I mean, you had the group, you know, trailing the S&P 500. Investors probably weren't expecting all that much then. They have reason to expect a lot more now, given how well the shares have done.
Yeah, pretty good stuff. Hey, Dave, thank you so much. Really appreciate it. Headline, Moderna discussing making COVID vaccine with Nexus Pharma. This is coming from Reuters. Shares in Moderna up 5.8%. Let's get back to world and national news. Nancy Lyons, take it away.
Thanks, Carol. President Biden says the remaining U.S. and allied troops will begin leaving Afghanistan May 1st. All will be withdrawn by September 11th, the 20th anniversary of the al-Qaeda attack on the World Trade Center. Bloomberg's Irv Chapman with details from Washington.
The president said the death of Osama bin Laden 10 years ago ended the threat that U.S. troops went to combat.
More and endless American military force could not create or sustain a durable Afghan government. I believed that our presence in Afghanistan should be focused on the reason we went in the first place, to ensure Afghanistan would not be used as a base from which to attack our homeland again. We did that. We accomplished that objective.
The president said U.S. aid would continue to the Afghan government, its armed forces, and agencies that enforce the rights of women, and terrorists would be targeted wherever they threaten the United States. In Washington, Irv Chapman, Bloomberg Radio.
Well, the financier whose name may be forever linked to orchestrating the largest Ponzi scheme in history has died. Bernie Madoff died from natural causes while in a North Carolina prison. Madoff admitted swindling thousands of clients out of billions of dollars in investments over decades. But during a jailhouse interview, he says he tried to set things straight.
I try to give monies back to my clients, to the individual clients. When I realized that it was impossible for me to get myself out, they wouldn't take it back.
Madoff says it was a nightmare for him. A court-appointed trustee has recovered more than $13 billion of an estimated $17.5 billion lost. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with Tim Stenovic in our Interactive Brokers studio. So listen, one of the main stories, I know we've been obsessed with Coinbase, and rightfully so, but let's not forget, that's kind of the upstart, the new way of doing things. We're talking about crypto and the crypto exchanges that are needed to trade digital currencies. But at the same time, all the old guys, the big banks, the folks on Wall Street, your Goldman, your JP Morgan, then you've got Wells Fargo, they reported today, and we got an update really on how things are going.
We did, and hey, for JP Morgan, it was and for Goldman, really good quarters.
I mean, listen, I was looking at some of the revenue numbers. I mean, first of all, trading was certainly a big help. Investment banking was a big help. We just heard from Anton Schutz talking specifically about SPACs. Listen, you know, there's a ton out there. They've got to do deals. The clock is ticking. There's advisory fees on both sides of the seller who sells to the SPAC, right, ultimately, and then also on the SPAC side of things. That adds up.
And I love the way that our own Jenny Serrain wrote about this, because if you think back to the meme stocks and what we saw in January, the narrative that emerged was, hey, these Reddit traders are taking on the big guys. Well, it turns out when you do all that trading, yeah, not so much. I mean, SPACs and meme stocks that fed windfalls for the big Wall Street banks. Goldman traders beat highest analyst estimates by $2 billion.
Right, exactly.
Take that, Reddit crowd.
Exactly. Snap.
Yeah.
So Goldman earned more from trading in the first 3 months of the year than it had in any quarter in the past decade, while JP Morgan saw such revenue climb 25%. Stock underwriters at both firms posted the most revenue ever after helping a flood of blank check companies. I mean, this is what's going on. JP Morgan, though, there were some concerns about lending, and so as Anton explained to us, first of all, credit card balances are down, so they're not making the fees on that. Lending, I guess, isn't happening as strong. So we did see JP Morgan shares trade a little bit lower. Goldman was up. Wells Fargo rallied big time. That turnaround story by Charlie Scharf, people are pretty excited about.
Yeah, and interestingly enough, you say that thing about credit cards. It's good news for the economy that people are paying down those balances.
Yeah, responsibility, right? Using that extra cash to pay them down. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Tech shares pushing stocks down from a record. Treasuries fell with the dollar. 10-year down 4/30 seconds. 10-year yield now 1.63%. NASDAQ is tumbling 134 points, down by 1%. S&P lower by 17, down 0.4%, close to lows of the day. We've got the Dow up 38, holding on to a gain now of 0.1%. 10-year yield 1.63%. Gold down $9 the ounce, lower by 0.5% to $17.36. And West Texas Intermediate crude up 4.6%, $62.93 for a barrel of WTI. Thermo Fisher nearing a deal to buy PPD for more than $15 billion. Headline from Dow Jones now crossing the Bloomberg Professional Service. Keeping an eye on Bitcoin, it is slipping from a record in the wake of the debut by cryptocurrency company Coinbase Global on the NASDAQ. Coinbase right now at $3.28. That is below the offering price. And share right now we've got Bitcoin trading lower by 2.4%. Again, recapping equities mixed. S&P down 18, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. And every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's John Tucker.
Restaurants forced to close indoor dining during the height of the pandemic turned to delivery to try and stay afloat. And when local delivery didn't generate enough business, they looked for solutions. New York-based Goldbelly, with its 65 employees, built a platform that empowered local restaurants to ship food across the country. Founder Joe Ariel calls it food e-commerce. It provided a new revenue source for restaurants shuttered during the pandemic.
So for a small business to be able to have a plug-and-play e-commerce solution to connect with fans and people that have never tried their product anywhere in 50 states is very powerful, very meaningful. And for many of our shops, they are, in fact, doing so well that they're sold out for weeks at a time.
In addition to using the platform, some local restaurants became the equivalent of fulfillment centers for Goldbelly. It's among the ways business has changed after a year like no other. John Tucker, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 9 minutes left in the trading day. It is time for the Drive to the Close. And joining us today, once again, Alan Lance, Research Director of LanceGlobal.com, President of Allen B. Lance and Associates. He's on the phone from Toledo, Ohio. Alan, good to have you back with Tim and myself. How are you? And I feel like interesting market environment, now that we start earnings. How are you, or what are you focusing on, I guess I should ask?
Well, I think it's been a situation, Carol, where the rotation has been actually a positive. We've seen a stall in the FANGs, and they've underperformed, and the Intels and the Ciscos of the world have perked up. And you look at healthcare and tech, it's underperformed, and 2021, you're getting strong as far as momentum from energy, financials, and materials, and they're picking up the slack. And I think that's a big positive. You've got the hot IPOs of Palantir and Snowflake and Hers Health down 50% from their highs. Even DraftKings is down from 74 to 59, and I think that's all bringing some rationality in the market. So it's not going to be all just value and cyclicals and at the expense of what used to lead the market, but it's going to be more of a valuation and in-depth analysis, that makes a difference, and that's right in our bailiwick.
Alan, how are you thinking about inflation and potentially hedging for higher taxes, rising interest rates?
Yeah, that's a big thing, Tim, that we wrote about in the last issue of the Lance letter, and I think we're going to see higher interest rates, and then obviously higher taxes, and then eventually inflation. I think everybody really has to look at getting some inflation hedges. I would look at real assets. If you look at in the 70s, what happened, and I don't think it's going to be that bad, but once inflation starts rearing its ugly head, it's hard to get rid of it, and I think it's a situation where you want to at least have some of your assets in actual single-family homes and actual natural gas wells. If you can't do that, then do the next best thing. But home builders have moved up, so we're not buying those. They're beyond our disciplined buy limits. But actually owning the physical asset, I think, is going to be important. Another gold has been just discarded here with the crypto craze, and I think it's a situation that buying a Barrett Gold or Newmont, $19-20 for Barrett or under 60 for Newmont, had a good dividend, and I think that's a nice hedge that's easy for investors to participate in.
See, and I think I'm not sure if I heard you clearly, Alan. Coinbase, was that anywhere in your buying list today?
Well, I think Coinbase is hot, and it's a situation where
it's on sale. It's down 12% from its opening price, so you can actually get a little bit of a bargain right now.
Yeah. No, it's not something we bought. It's something that I was saying that rather than chasing these, the Bitcoin and 65,000 in Coinbase, that just kept on rising and rising before it finally came out. We're long-term disciplined investors, and I'd rather take that money and buy some income-producing gold mining, silver mining type companies that are paying strong dividends and doing well and being ignored. So
you did know I was sarcastic, right?
Yeah,
I hope.
Yeah, exactly.
Well, look, how are you thinking about, I don't want to call it froth, I don't want to use any of these kind of tired terms, but look, we're seeing record after record. We're seeing companies with direct listings with valuations of $100 billion that are tied to cryptocurrency. How are you thinking about the opportunities to put money to work when we are seeing people say the T word, top?
Yeah, I think you got to look at going back to the basics and fundamental analysis and doing it the right way. And it's good that the SPACs have lost a little bit of their craze, and we're seeing as far as the IPOs lessening and that type of thing. We were setting ourselves up for a bubble, really, if this would have continued. So I think the rotational correction we had talked about initially, is very important to the long-term health of the market. But we are definitely setting ourselves up. Even the tailwinds now that are pushing the market higher, like the stimulus and as far as still low interest rates, I think are definitely going to be negatives down the road as interest rates rise and as the stimulus you get to a point where you got to do something with the deficits, and nobody's talking about that.
So hey, listen, we are talking a lot about banks today. What are your thoughts on that? Any opportunities there? Any interest, whether it's in the big guys or maybe some of the regional players?
I really like banks. Start the year, I think that was one of our favorite sectors when we talked, as far as a few months ago. But really, they've moved up, Carol, to a point where, I wouldn't, chase them. One of the only financials that is still within our buying territory, high teens, low 20s, is rocket companies. I think they've got a good technological advantage, and you can still participate because interest rates aren't going to soar, even though they have edged higher, and that's one of the reasons the stock is still at a bargain. But really, the companies we talked about, 6 months ago, like the Wells Fargos and the like, have just gone to points where we'd be more likely to take profits in the strength here than buy them and chase them.
How concerned are you about things getting too hot? You talked a little bit about your inflation picks, but I mean, are you concerned that we are going to start seeing real inflation? And we only have about 30 seconds left.
Yeah, I think we will see inflation. I mean, we're starting to see it already with food and I think energy. That's one of the reasons. And natural gas is one of our big plays. In that energy sector, and I think that it's a situation where you definitely want to position now because a year from now it's going to be a hot topic, and you don't want to be chasing. You want to be buying selectively and getting your portfolios positioned appropriately now before prices get out of hand on the inflation hedge front.
All right, we got to run. Hey, Alan, always good to check in with you. Be well. Alan Lance, Director of Research at Lance Global. Coming up next, Bloomberg Beyond the Bell, our cross-platform coverage of the market close with my colleagues from Bloomberg Television, and this is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day here, Romaine Bostic and Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast back and forth, Carol Masser and Tim Stenovic in the flesh.
I'm here.
Our Bloomberg television and radio audiences. Quite a day. Tim, I mean, I'm sure you had to be keeping an eye on everything that's been going on.
Yeah. I mean, let's talk a little bit about Coinbase. I mean, come on. $100 billion in valuation. I mean, think about the New York Stock Exchange, the NASDAQ. This is just massive, massive, especially when compared with, exchanges that have been around for centuries here, Taylor.
And Romaine likes to tell me that I get too hysterical on days like today as we see it dip down to a 328, Romaine, coming off of that 380 price target.
Oh my God, panic.
Carol, but talk to us. Ignore my hysteria, Carol.
I'm going to ignore your hysteria. I'm going to ignore the hysteria over Coinbase because it definitely pulled off its highs and it really dragged the overall tech market down. And I think that's something of note. At the same time, you've got the big banks, the established players, billions of dollars in revenues. Yeah. We saw some record moves when it came to trading, and I think, Romaine, that is something you cannot ignore. And the big banks, they'll continue throughout the week in terms of earnings.
Yeah, well said, Carol. I mean, the health of the big banks certainly giving a little bit of optimism here. And on a day where I think people are still trying to figure out what the longer-term direction here, whether they're looking at rates, whether they're looking at inflation. But keep in mind, at one point today, the S&P was at a record high. At one point today, the Dow Jones Industrial Average was at a record high. Of course, they did pull back a little bit from that. We saw a nice little bid come into the Russell 2000 today. That looks like it's going to finish the day in the green, up about 0.8% here. So you are seeing weakness in the tech sector and the NASDAQ composite, as you see on your screen, at least for our television viewers who can see, of course, our Bloomberg radio viewers. Just listen. Just keep your eyes on the road and listen here. S&P 500, 41.24. NASDAQ, 13.8610, down 0.9%. The Dow Jones Industrial Average finishing the day higher, 33.739, up 0.2%.
What's interesting, though, as you said, Romaine, we were pulled off of a record level here. And I think a lot of it has to do with, I was looking at our Vince Signorella writing in our global squawk box. And, Coinbase, as it moved down, it pulled back those tech names. So we did see the NASDAQ, as you mentioned, really the biggest decliner, guys, on a percentage basis.
And you certainly see that on a sector level. I'm taking a look at some of the individual sectors that we follow here for our radio audience as well. Energy is firmly in the lead. Carol, it was a risk-on day. The banks in the lead. You somehow remind me we had bank earnings. Fundamentals, Taylor. Get your head out of Coinbase. The banking sectors are up about 0.7%. That reflationary yields higher also means that technology, some of the semiconductors, some of the automakers, those were the lowest sectors, of course, going on that rate story. And then, well, maybe the Coinbase story, Carol.
Well, you mentioned the banks. Of course they were on fire today, although you got kind of a mixed in terms of how investors read the results. Goldman, check it out, 47% surge in revenue, led by a jump in equities. I mean, a roaring quarter for them when it came to trading and investment banking. That stock was up just about 2%. Take a look at Moderna, another gainer that we saw in the trade. That stock was up almost 7%. Some headlines just moments ago. They are talking about making their COVID vaccine with Nexus Pharma, so they continue their rollout. And listen, it's been a plus for Moderna and Pfizer, certainly, with the J&J concerns. Freeport, another one, up almost 8%. We're watching some of those commodity plays. And then you got to talk about Coinbase because, man, it was on fire.
Yeah, I mean, Carol, not every bank, though, despite record quarter, was up today. JP Morgan was one of the laggards that we kept an eye on. A record quarter, not enough for investors. Shares of JP Morgan down 1.86%. We're also keeping an eye on Peloton today because shares down, get this, after Dish Network's Sling TV filed a lawsuit accusing Peloton and other companies of patent infringement. Those other companies, Lululemon, the owner of Mirror, of course, and then the parent company of a Nordic track, which is Icon Health and Fitness, Taylor.
And so much of those technology names that you highlight there are the big decliners. Why? Because yields are higher, Romaine. Do I hear inflationary, reflationary, higher yields are on the horizon? It pushes the Russell 2000 higher.
163.23
You're up 2.
on the 10-year
That's
yield.
my moment to shine.
Okay.
2 basis points. I'm going to take that 2 basis points and run with it. Across the curve. Carol, a 163.
All right, I'm not getting in the middle of you two and your fight over yields and inflation. I'm going to take us back to Coinbase because it is one of the big stories. I mean, listen, we were all glued to our Bloomberg terminals just waiting for the open. What a pop. Listen, at its highs, it was up 72% off of that opening price. Settled down a bit, though, Romaine. Down about 31%, but nonetheless, we're going to be watching the crypto area.
And we should put this in perspective, too. In the private market prior to the direct listing today, this company was relatively priced in that $300 range. So the close that we got today pretty much puts it about where it was. So no one should really panic just yet. I mean, we'll see how this plays out over the next few days.
But one of my favorite stories about Coinbase is the idea that it gives people who may be a little tepid to get involved in cryptocurrency or Bitcoin, it gives them exposure to the asset class. Remember, this is an exchange. You're not actually buying into the cryptocurrency if you're necessarily buying into Coinbase. You're buying into the idea that people are going to be buying and selling it. So if you are interested in it, but you're not quite ready to dive in completely, but you think there will be activity around it, this is really the sales pitch.
And I love that you bring that up, Tim. We're going to be hosting Bloomberg Technology later, Carol, at around 5 p.m. Eastern. And we're talking to some of the early investors like Andreessen Horowitz of this company is different than it was back 10, you name it, years ago, where it's different, right? It's not just a pure play, you can play Bitcoin. It is going to be a platform. It is going to legitimize, bring in institutional interest into cryptocurrency that had been really shunned. It's been a journey.
It's so interesting. On Bloomberg Radio earlier, we played a soundbite from JP Morgan's Jamie Dimon back in 2017 where he's like, this crypto stuff.
It's not even that long ago.
It's not, right. It's only a few years ago. Remember when kind of the establishment were just shunning it, and now you see all of the players, regulators increasingly remain getting involved.
Yeah, and before, of course, you get to Bloomberg Technology, you got to check out what you missed. Going to have Catherine Cooley of Binance going to be here to talk about that.
Guys.
Always be selling, Carol. No, well, so we're gonna have the CFO of Wells Fargo. It was actually a big day for them. A rare day where we see a Wells Fargo actually outperform the other banks on earnings day.
This is an important one because Charlie Scharf has been working on a turnaround. He has been cutting assets, Tim, left and right. You and I have been talking about this on Bloomberg Radio with Anton Schutz. I mean, this is a turnaround story, and it's continuing, and investors, Tim, are definitely buying into it.
Yeah, they're certainly buying into it today. And one thing we're going to continue to keep an eye on is bank earnings because we are just at the beginning of it. We still got Bank of America and Citigroup tomorrow, and then Morgan Stanley later in the week.
I think what really stood out to me, though, is there was some confusion about the headwinds as it relates to loans. Romaine, you heard that from Jamie Dimon. He tried to clarify that on the call. Yeah. And then Wells Fargo as well, hinting that loans might be some weakness. So I'm really looking forward to getting some clarity about loans. And mortgages are doing well, but are consumers taking out loans, or are we really trying to repay some of that debt?
Well, I mean, you got all those stimulus checks out there. You got a lot of people flush with cash who are on the other end of the sort of income spectrum. So you got a lot, at least at the consumer level, you don't have a lot of reason to take out loans. And you're even seeing that, of course, at the corporate level, too. So many companies were able to borrow over the last year. Do you really need to borrow here in 2021?
Well, and listen, as for consumers, we saw it in terms of credit card balances. People have been paying down those balances, taking those stimulus checks and reducing some of their debt. That has meant that revenue stream for some of these credit card companies or those big banks that have, of course, credit cards, that line on the balance sheet was down. So that's something to keep in mind. And we'll see what happens from the other banks. Hey, speaking of, though, the consumer, tomorrow we get a retail report, and it's going to be a big number.
That's going to be a big number. I mean, we're talking about 5.8% jump on a month-over-month basis. Of course, that's coming off that 3% decline that we had in the previous month. Of course, a lot of that is because potentially of that fiscal stimulus, so maybe that's not going to be a sustainable growth rate.
Was it Yelena Shilyacheva that told me to stop doing year over year? We have to look at month over month as it relates to CPI, PPI. Carol, I wonder if we do that too with retail sales, as we have to be very mindful of some of the base effects that we had a year ago as it comes to all of some of these consumer spending numbers that we're getting. We migrate forward with month over month numbers.
Yeah, we'll see what maybe some of our listeners and watchers are saying as they are watching us in this simulcast, our Beyond the Bell simulcast on Bloomberg TV and Bloomberg Radio. Tim, we'll have to see what they have to say about that.
Hey, I want to know all about that revenge spending, revenge shopping. It's something that Kim Bassine wrote about a few weeks ago, and the idea that consumers have been all pent up, they're flush with cash.
I am ready.
Have they been spending? Are they running out and buying things?
My revenge spending is on United Airlines, trying to get back home to see my poor dear family. Romaine, what is revenge spending on?
I don't. I'm a saver.
You're a saver. But listen, let's get ready for it. You've seen CEOs like in the retail sector kind of getting ready for people who have been saving money, not spending on anything, and getting a chance to do it. All right, I do want to mention quick headlines. Dell Technologies announcing a planned VMware spinoff that just crossing the Bloomberg terminal. I know. How long have we been talking about this story, Romaine? All right, everybody, that's going to do it.
Here.
Yeah, exactly. TikTok. That does it for Beyond the Bell, our cross-platform coverage on Bloomberg TV and radio. We'll see you tomorrow on this same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, yes, indeed. Carol Masser, along with Tim Stenovic, wrapping up the trading day and definitely finishing off our highs of the day. Tomorrow, though, Tim, as we just talked to our Bloomberg TV and Bloomberg Radio audiences, we're going to get some more big banks. So we'll have Bank of America, we'll have Citi, we'll have the rest of the Morgan Stanley, and we'll get a better idea of what the consumer's up to and what banks see in terms of the outlook.
I'm interested, too, to hear from airlines, because we're going to start hearing from the airlines as well. And that's really important because they can talk about the way that they're changing capacity expectations, how they're thinking about bringing back staff and when they're thinking about bringing back staff. Talk a little about demand, how it's looking. I mean, I know a lot of people who are booking tickets now that they know when they're going to be vaccinated.
I talked with the CEO of Hyatt Hotels earlier. We're going to hear from him in just a moment, and we'll hear about the outlook. But he says one of the metrics that they've been watching, certainly in the pandemic, is they're watching what's going on with airlines in terms of what they're doing, because that'll give them an indication of whether people are going to come back to hotels.
All right, I got to get on it because those prices are going to start going up. We haven't booked anything yet.
I haven't booked anything either. All right, Tim Stenovic, you have a great night.
Thank you. You too. I'll see you tomorrow bright and early.
Good to have you back. All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says all U.S. and NATO troops will be pulled out of Afghanistan beginning May 1st and ending by September 11th.
The plan has long been in together, out together. U.S. troops, as well as forces deployed by our NATO allies and operational partners, will be out of Afghanistan before we mark the 20th anniversary of that heinous attack on September 11th.
Biden says it's the right thing to do after America's nearly 20-year military involvement in Afghanistan. Well, he orchestrated the biggest Ponzi scheme in history. Bernie Madoff has died in federal prison. We get more on that from Bloomberg's Nathan Hager.
The longtime investment advisor bilked his A-list clients out of more than $19 billion over decades. Jim Campbell, author of the forthcoming book Madoff Talks, says he actually built one of the most ethical businesses on Wall Street. On one hand,
at the same time, 2 floors down behind a locked door with several unsophisticated folks, he built the biggest criminal enterprise in Wall Street history.
In a statement, Madoff attorney Brandon Semple says his client lived with guilt and remorse for his crimes. Quoting here, Bernie was by no means perfect, but no man is. Bernie Madoff was 82. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, a former Minnesota police officer is under arrest for the death of 20-year-old black man Dante Wright. Minnesota authorities say Kim Potter was arrested this morning and faces a second-degree manslaughter charge. The former police chief says Potter intended to use her taser on Wright, but fired her handgun instead. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. I'm Carol Masser. Joining me is Charlie Pellet. Charlie, this popped up on my phone this morning when I was reading in, and it's from it's in the New York Times. It's also in the Washington Post. It is a letter, hundreds of companies and also senior executives, companies like Amazon, Google, General Motors, Starbucks, among those joining the biggest show of solidarity by businesses over legislation in numerous states. We're talking about them getting together and doing so in opposition against, quote, any discriminatory legislation, end quote, that would make it harder for people to vote. And I am reading from the Times story. story.
Exactly. And this is a big deal. The statement organized in recent days by Ken Chenault. He's the former CEO of American Express. Also Ken Frazier, former CEO of Merck. A copy, as you correctly mentioned, appearing both in the Times today, also the Washington Post. Keep in mind that senior Republicans, including former President Donald Trump and Senator Mitch McConnell, have called for companies to stay out of politics. But a lot of big companies, they're getting involved big time.
Yeah, stay out of politics, but it's okay to send me a check to support my campaigns. Just going to put that out there. And we should also put out there that Michael R. Bloomberg, of course, the founder of Bloomberg LP and Bloomberg Philanthropies, was a co-signatory on that letter as well. Well, listen, this is a big topic of discussion. I talked about it earlier, and Tim and I talked about it with Jeff Sonnenfeld over at Yale School of Management about CEOs stepping up, stepping out, speaking out, Charlie, when it comes to some very controversial issues. You know, when a lot of PR consultants are saying, be quiet, don't say anything, we're seeing increasingly CEOs step up, and I think employees are mandating it, and I think their consumer base is often mandating it as well, or asking for it.
And just to underscore, too, you mentioned some of the companies at the top, but also just want to add General Motors, Netflix, Starbucks, and according to the New York Times, it does represent the broadest coalition yet to weigh in on this voting rights issue.
Coca-Cola and Delta, they are in Georgia. They condemned the Georgia law after it was passed. They declined to add their names, according to people familiar with the matter. According to the Times, Home Depot also declined, even though its co-founder Arthur Blank said in a call with other business execs over the weekend that he supported voting rights. Charlie, thanks. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word from Costco Wholesale that it is boosting its quarterly cash dividend. That dividend going to 79 cents a share from 70 cents. Estimates were for 75 cents. Also, an interview underway right now on Bloomberg Television with the CFO of Wells Fargo. He says that consumer and corporate credit performance is strong, also sees more demand for credit as normalcy returns. Turned out to be a mixed day on Wall Street today with the Dow higher, S&P, NASDAQ both lower. Stocks retreated after climbing to a record. Treasuries fell with the dollar. Oil rallied. First day of trading today for Coinbase. Coinbase ended the day at 328.28. That was below its offering. S&P down 16 to 41.24, drop of 0.4%. NASDAQ down 138, down 1%. The Dow up 53, up by 0.2%. 10-year yield 1.63%. Gold down 8.60 the ounce to 17.36, down 0.5%. And West Texas Intermediate crude up 4.5%, 62.90 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Today I hosted a Bloomberg Live event. It was all about disruption as being an economic driver. And at the event, a dream panel of CEOs. We talked about a lot, including their outlooks on their specific industries. So right now you're going to hear from, first of all, Hyatt CEO Mark Hoplamazian, followed by Joanne Crevaux-Serrant. She's the CEO of Tapestry. Then Rich Gelfond, CEO over at IMAX. And finally, we'll wrap up with Mitchell Baker, CEO and chairwoman over at Mozilla. Check it out.
I would say that, we've been enjoying some very positive momentum since the end of January this year in the United States. China went through a shutdown and has reopened again and is growing significantly post-reopening. But I would say that as much as we see booking activity steadily increase, we're also positioned to be ready for a potential retraction. And the only reason we are is not because I have a crystal ball. The one thing I've learned over this past year is that that's not possible. But we've become conditioned to just recognize that the path forward is not able to be predicted much past the coming week or so. And so we remain ready to pivot if we need to. There's no evidence that that's a problem at this moment, but there are more surges that we're seeing due to the new variants that are now the dominant caseload in many countries, quickly becoming the primary one in the United States. So we remain ready for a retrenchment, but so far we've seen positive momentum.
Joanne, come on in on this, because retail, too, anything with brick and mortar was really shut down. You have brick and mortar, you have e-commerce. Tell us, though, about your brands, whether it's Coach, Kate Spade, or Stuart Weitzman. What's the outlook?
Well, I will say we're optimistic, but the operative word, over the past year has really been agility. Echoing Mark's comments, we had very little visibility coming through the pandemic as to what the trends would be. And our focus as a company has been to get closer to our consumer, to lean into digital and data and analytics, tools that are becoming more available. We were seeing some of these disruptions happen pre-pandemic and really embracing that, and then becoming a leaner and more agile organization so that we can be more responsive as we see these trends unfold. And we've been encouraged by the amount of support and the amount of engagement we've seen all the way through the pandemic with our brands, and believe we're well positioned as we come out of the pandemic to continue to serve our customers.
Rich, you, like so many others on our panel today, you went into COVID early because of your exposure over in Asia. You came out of it earlier because of your exposure in Asia, China specifically. How are things going? Are people coming back to theaters?
Where people feel safe, Carol, and in fact they are safe, they're coming back to theaters in some cases even in record numbers. So China, for example, we operate in 84 countries, and in China we typically do about 10% of the Chinese box office on 1% of the screen. So Chinese New Year is the biggest movie-going time of the year in China. It's around February, and this year was up 30% over the record, which was 2019. In Japan, we had a film called Demon Slayer, which became the highest grossing film in the history of Japan, highest grossing IMAX film as well, despite capacity limitations a couple months ago. So there's no question in my mind where it's safe, it's going to bounce back, and it already is in a big way. You look at North America, we just had Godzilla versus Kong, which, as you know, opened way stronger than people thought to around $50 million its first weekend. Europe is a little slower, a little bit more troubling, as is Latin America. So I think you really have to look at this on a region by region basis. And again, as others were just saying, I don't think you could get too high or too low. One of my favorite business sayings, it's never as good as it looks or as bad as it seems. So I think you have to look at, as a trend-wise, it's getting better and not get too distracted by the short-term news.
We say that in broadcast. It never is as good as it feels, and it's never as bad as it feels. Mitchell, come on in on this. Firefox, I feel like we've all been online so much more, right? Obviously, working from home, we've all been browsing a lot more. Has Firefox and Mozilla benefited from what has happened over the last year? And I say that because there are companies that actually came out winners, you know, during the pandemic. And I'm just curious how you guys saw it.
What we've seen in the last year is change in habits. You know, the title disruption, I think, is quite real here because even online, people's habits are changing. What they're doing, you can see that. And so I would say, you know, Mozilla, our goal is a better internet. The reason that our organization exists is to build a better internet. We do it through the market, so we're a software vendor, you know, like others, but our actual motivation is something quite different. And so if Firefox has done quite well in the last year, and in the bigger picture, I'd say, you know, both the good and the bad of the current state of the internet have been magnified. And so obviously, in the larger picture, we'd say we'd really succeeded because we're all living online and doing things online we hadn't imagined before. But also the issues with the nature of online life and the way our engagement works are so obvious. And so, you know, with Firefox, we try to address that now even more. How do you search things? How do you find what you want? How do you find with Pocket, you know, content that's worth your time, not clickbait? How to test out ways of engagement that aren't about building outrage for more engagement so that our, you might say, the better side of human nature can be more reflected in online life. And that, of course, is a work in progress.
Like I said, a dream panel, the CEOs of Hyatt Hotels, Tapestry, IMAX, and Mozilla. Check out BloombergLive.com for that entire panel. We went to so many different areas and how their businesses and industries are changing as a result of disruption in the pandemic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, get ready to blow your minds. I'm just going to put that out there because that's what's coming up. We're going to talk about genomic engineering. We're going to talk specifically about the bioeconomy. We're going to do that with the CEO of Inscripta. We'll get to him in just a moment. First up, let's get another check on some of the news after the close. Here is Charlie Bellett.
Hi, thank you very much, Carol Master. Here's what's going on. Dell Technologies says it will spin off its 81% ownership stake in VMware, creating two separate companies by the fourth quarter of the year. Last July, Dell said it was considering a spin-off of its VMware stake, but the transaction would not occur until after September for tax purposes. Stocks retreated today after climbing to a record. Treasuries fell with the dollar. We had oil rallying. The price of crude oil today up by 4.5%, $62.86 a barrel, up by $2.68. Gold down 0.5%, $17.36 the ounce. 10-year yield 1.63%. S&P down 16, drop of 0.4%. Nasdaq down 138, lower today by 1%. Dow Industrials up 53, a gain of just about 0.2%. Cryptocurrency exchange Coinbase Global soared above $112 billion valuation in its trading debut today, and then slipped back below its opening price as Bitcoin fell from a record, with tech stocks moving lower across the board. As for the market backdrop, Alan Lance is research director at lanceglobal.com. He was our guest on Bloomberg Business Week.
The rotation has been actually a positive. You know, we've seen a stall in the FANGs, and they've underperformed, and the Intels and the Ciscos of the world have perked up. And, you know, you look at healthcare and tech, it's underperformed, and you know, 2021, you're getting, you know, strong as far as momentum from energy, financials, and materials, and they're picking up the slack.
American Airlines Group is gambling on a strong travel recovery this summer as COVID-19 vaccinations increase, with plans to fly more than 90% of its 2019 domestic seat capacity and 80% of international among the airline names. American down 0.8% today, UAL up 0.5%, Delta down 0.2%, Southwest down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thanks. Well, last year, McKinsey came out with a report, and they noted that the bioeconomy could have a direct economic impact of up to $4 trillion a year over the next 10 to 20 years. One company working in that world is Inscripta. Sri Kozaraju, he is president and CEO of the digital genome engineering company that we just mentioned, Inscripta, and he joins us on the phone in San Francisco. Sri, forgive me from the mispronunciation. It's when I can't even read my own notes or phonetics. But it is good to have you here, and I have to say that my producer, you bet, my producer and I were talking earlier that this was just something that we love to talk about. Tell us, first of all, how are you doing and what the past year has been like?
Yeah, well, first of all, Carol, thanks for having me on. I'm a big fan of Bloomberg Radio. I listen to it every morning, so I did want to say that before we get started.
In the morning, you didn't say the afternoon. Now I'm a little worried. No, I'm just kidding. Go ahead.
Yeah, I wish I could listen all day. Well, last year has been phenomenal on many fronts. Obviously, the opportunity we're going up against has gotten a lot more visibility, and we'll talk about what that means in the bioeconomy, but it is going to be something that I think people start hearing much more about, and the additional dimension that it adds to the potential of our economy and to society at large. The pandemic has obviously made it tough for us, as it has for many other companies who are innovating, but we have very dedicated employees who have been in the lab diligently working. We've had our commercial teams diligently preparing to launch our first commercial product, the Onyx platform, which we announced just a few weeks ago that we shipped our first commercial unit. So we are trying to make progress despite the pandemic.
Well, tell us exactly what the bioeconomy is.
Yeah, so it is, as I said, to me, it's an additional dimension to the economy. And you referenced at the outset a McKinsey statistic. Another statistic from McKinsey last year was that in principle, approximately 60% of the physical inputs to the economy could be biologically produced. And when you sort of take a step back and think about that, that explains the magnitude of what we talk about with the bioeconomy. Biology's played an important role in the last decade on discovery in life sciences and even in the production of therapeutics. However, bioeconomy is larger than that. It affects many more industries beyond just healthcare, and it has much more far-reaching impact into products that all of us touch every day. And there's a couple of themes that are sort of catalyzing this movement, and some of them are very familiar to us, the movement to sustainability, the movement to climate change, to adapt to climate change, and the basic movement around just greater performance and efficiency of our products and businesses. So there are so many confluent catalysts that are really accelerating this movement in the bioeconomy.
So I feel like we're speaking, Shri, in kind of broad strokes here. So tell me, like, drill it down. Like, does this include things such as growing food in labs, growing organs in labs? Like, tell us kind of when we get down to a granular level, like what exactly this means.
So the most common things that you might read about if you were to Google it would be in agriculture, crops or plants that are disease resistant, that are characterized traits that allow them to grow and prosper more efficiently. So agriculture is a place where you might hear and see this a lot. And as our global population grows, as we're trying to get more efficiency out of the land and water in plants, this is one area that a lot of companies are looking for to see innovation and benefit. Cosmetics, you find that also are starting to talk about using gene engineering to manufacture more sustainable cosmetic products. We also see it if you kind of move back, I said it's beyond healthcare, but if you kind of move back to healthcare, even in biologics, just today I was talking to a researcher in Europe who was very keen in his study of antibiotics. Antibiotics haven't really been advanced in the last 2 decades, and many of the organisms in the body have shown resistance to antibiotics. So researchers are studying what causes that, and can we identify and isolate those parts of the genes that contribute to that so that we can design more effective antibiotics in the future. So really, as you can tell, just such a wide range of potential application.
So sit tight for a second, Shri, because we're going to do a little bit of news, but I want to come back and then kind of piece in or roll in what your company is doing specifically. I'm curious about partnerships and who you're working with, and I know you just got another big funding round, so we'll dig a little bit deeper into that. We're going to come back with the CEO of Inscripta. He is Sri Kazaruju. He is on the phone from San Francisco, and we'll continue that conversation in just a moment. In the meantime, let's get a check on world and national news. For that, we turn things over to Nancy Lyons in D.C.
Hey, Carol, President Biden says it's time for our troops to leave Afghanistan.
After consulting closely with our allies and partners, with our military leaders and intelligence personnel, with our diplomats and our development experts, with the Congress and the Vice President, as well as with Mr. Ghani and many others around the world, I've concluded that it's time to end America's longest war. It's time for American troops to come home.
Biden says, as promised, troops will begin the withdrawal on May 1st with completion by September 11th, the 20th anniversary of the attack that was plotted by terrorists based in Afghanistan. During testimony for the defense in the trial of former Minneapolis police officer Derek Chauvin, pathology expert Dr. David Fowler, the former chief medical examiner for Maryland, says he believes drug use, even carbon monoxide from car fumes, may have led to George Floyd's death. He says the fact Floyd's heart was enlarged meant he needed more oxygen to function.
When a heart or any other muscle grows in size, its consumption of those vital components increases. So Mr. Floyd's heart would have twice the need of those nutrients compared to a 260-gram heart.
Fowler also speculates Floyd's meth use may have led to his death. The former police officer who shot and killed a young black man in a Minneapolis suburb has been charged with second-degree manslaughter. Her former boss says Kim Potter meant to fire her taser, but instead shot her firearm. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Charlie Pellet joining me right here on Bloomberg Radio. So, Charlie, you fly a lot. You like to travel a lot, at least in a normal world. And I know you're already thinking, and I know you and I were just talking about a trip you're getting ready to take, I think, maybe in the summer?
Exactly. No, a couple of weeks from now. Yeah, I'm getting on an Amtrak train in Denver and taking the train across to Sacramento. I love trains.
No planes, though, huh?
Well, you got to get out to Denver.
Yeah, exactly. Oh, that's true. So the risk of being exposed to the COVID-19 virus on an airline flight, listen to this, everyone, drops by as much as half when airlines keep those middle seats open. This is a new study published by the U.S. government, concluding the CDC. And listen, it's a safety practice that carriers increasingly have abandoned. I think Delta was one of the last to kind of not sell those seats, and I think they're going to give them up, those middle seats, starting May 1st.
Indeed. And also, too, it depends on how many people you're traveling with. I mean, immediate family members, one of the cool things about flying on a 767 is you got a seating configuration of 232, at least for those of us sitting at the back of the plane. Anyway, that's one of the things that you can do when you choose your flights is, how is the plane configured? However, I read this story, Carol Massar, and there are a lot of moving parts as to when this study was done. Also, too, masks or no masks on board. A lot of questions to me as I read this story about the risk of exposure on an airline with or without middle seats. It certainly raised the number of questions I had in my mind about just how safe is it to travel on an airplane.
Yeah, exactly. Since as people the world reopens, airlines reopen and all that good stuff, I think people have been assuming it's kind of safe to reopen those seats, but this is showing really how risky it is to travel during the pandemic. It did not attempt to estimate infection risks, according to this study, and was based on modeling done before the pandemic, so it didn't consider rules that now require face masks on flights. But the risk of coming in contact with the virus dropped by 23% to 57% if airlines limited passenger loads on both single-aisle and wide-body jets, compared with full occupancy, Charlie.
And from planes back to trains, very briefly, just to let you know that I'll be traveling in my own little room on board the train.
Oh, nice.
Yes.
You travel in style,
On
Charlie
points.
Pellet. All right, this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A mixed Wednesday. The Dow higher, S&P, NASDAQ both lower. Stocks retreated after climbing to a record. Treasuries fell with the dollar. Oil rallied. West Texas Intermediate crude up 4.3%, 62.78 a barrel. Gold down 0.5%, 17.36 the ounce. 10-year yield 1.63%. As for equities, the Dow up 53, higher by 0.2%. A retreat for the S&P, down 16, down 0.4%. NASDAQ down 138, lower by 1%. NASDAQ 100 index down today by 1.3%. Bitcoin slid in the wake of the debut by cryptocurrency company Coinbase Global on the NASDAQ. Today we had Coinbase and after earnings. Tomorrow morning we hear from Citigroup and Bank of America. Recapping equities mix with the S&P down 16, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. Sri Kasaraju is with us. He's president and CEO of the digital genome engineering company. It's called Scripta, and Sri is still with us on the phone in San Francisco. So, Sri, tell us about kind of where your company fits into this world of the bioeconomy, what you are specifically doing, who you're working with.
Sure, Carol. So the mission for Inscripta is to enable researchers to realize the full potential of the bioeconomy. And specifically, what that means is in our first product that we're launching, it represents the first digital genome engineering platform in the world that can sit on a bench in a lab. This initial platform is for microbial, so yeast and E. coli organisms. And just to kind of put this in the context, what can it do? A typical experiment, a gene editing experiment that a lab may have done with a couple PhDs over the course of many months up to a year now can be done in a matter of weeks or months. And it's an incredible savings of time, but more importantly, the scale of edits that this can produce in a single run can get up to 10,000 single edits in parallel. So there's incredible power in the scale of this platform. And it's really opening the minds of many researchers that we speak to about what kind of work and research they could do with it. So that's the Onyx platform, and behind it, we're in development on several other very exciting platforms as well.
Can you talk to us at all about some of the partners or some of the areas that you're working in specifically? I know you talked about kind of applications of this. So I'm assuming a lot of it is either ag or healthcare. I mean, where is it?
Well, we're just getting started commercially. So we announced our first commercial shipment to Gene Mill in the UK, in Liverpool. There are two main categories of folks that we're talking to right now about the platform. One is your core academic research centers, and two are bioindustrial companies, and the range of industries that represents. You're right. You know, it's a very wide range. But many of these folks are already utilizing CRISPR in some way, meaning they're doing some form of gene editing in-house already. And they're looking to really make those experiments more efficient, but also explore what more can they do with a more powerful system and platform.
So, okay, forgive me, because I'm thinking we've got a lot of listeners, and we have a really smart audience. And I'm going to, this is not my world, but it definitely interests me in terms of gene editing and kind of where this is all going. So if you were sitting down with someone to explain kind of the potential, because it sounds like we're on the cusp. There's a lot out there already, but there's so much more that can be done when it comes to the bioeconomy or the genomic engineering that you guys are involved in. How would you explain it kind of to a lay person in terms of how it might impact us in the years to come? Also, as an investor, kind of who will be the players involved in it? Because I am curious about kind of your own future. Yeah.
Sure. Yeah. So that's a great question. So to put this into context, if we think about genomics, and even with COVID, we've heard about some of these terms of the technologies that are being used. PCR and next-gen sequencing are amongst some of the biggest step function changes in our history as it relates to genomics. And those are all around reading genes. And that's provided us incredible information. We've utilized it in a variety of ways for research, even trying to develop diagnostics or even things to fight things like the COVID-19 virus. What CRISPR has done is provided a step function change against those prior historical advancements. Now, with CRISPR, we can edit genes. We can write genes instead of reading them. And the opportunity around that is massive. When we speak to researchers, they're trying to create as much, they call it variation. That means as much things to study around something to learn as possible. But it's not just about research and information now. With gene editing, we can also create new products. And that's the biggest change with this advancement of what we at Inscripta, as well as others, are going to be doing is we're not only going to be understanding information, but we're going to be creating products with this technology as well. And that is where the breadth of the opportunity is just so incredibly massive that we're all quite excited about it.
Well, so tell us about this $150 billion Series E financing round. I think it was led by Fidelity. There's also funds and accounts from T. Rowe Price that are involved in it. Tell us about that and that money. What will you guys plan to do with it?
This is just an incredible market. I know all the listeners know that from watching the market environment we're in and seeing the premium for innovation and growth companies. And specifically in the life sciences, this whole area of gene editing also has been extremely robust and a lot of capital going against it because there's a lot to do. Mm-hmm. We looked at this round as an opportunistic financing. We were well capitalized. There were a lot of alternatives for companies to raise money, to go public. We think we got the best of both worlds. We got really world-class long-term investors, and we also retain the ability to grow our business privately, which affords tremendous flexibility and the opportunity to explore new areas. And so the $150 million, I use the word opportunistic. It's really around going after additional areas where we can bring our technology to more and more researchers. So these are things down the road beyond what we're already developing with either Onyx or our mammalian platform.
What is the growth of the company? I know you're early in. What are your expectations going forward?
This is as we've established, such a large market. The focus for us is exactly that, having focus, picking certain areas and customers and really showing success of our platform. So it might be contra to what someone might think about, really going fast and growing fast. For us, the long-term future gets solidified and much stronger if we can be successful showing customers applications where they can use this technology and where they can do things they haven't done before. So when we look at this, and when I think our investors who got involved in the Series E looked at this, it wasn't about driving 2021 or 2022 platform revenues or sales. This was about how do we secure our place as a long-term impact, that can drive a new paradigm change, not just for the technology, but for us as an organization. They've encouraged us to be aggressive and invest and to take our time making good decisions, that aren't necessarily short-term oriented, but can drive greater long-term stability and success. Right. We think this is going to be a new large market, and so being early, being smart about how we build a company for the future are paramount.
Well, we look forward to hearing more, and I hope you'll come back, and by then, hopefully I will have your name down, Pat. Sri Kozaraju, he is the president and CEO of the digital genome engineering company Inscripta, and we appreciate his time. Shares of Dell, by the way, up about 8.4% in the after hours, saying it's going to spin off VMware software unit by the fourth quarter. Have a good and safe evening, everybody. This is Bloomberg.